According to the report by the Tax Justice Network, Exxon uses a complex web of offshore shell companies and complicated high-interest loan structures to artificially reduce its tax payments in Australia. In effect, the report says, Exxon's entire Australian operations are owned through the Bahamas, in what appears to be a Caribbean variation of the aggressive tax minimisation scheme known as the Double Irish with a Dutch sandwich. Exxon is the poster boy for corporate tax dodging, report author Jason Ward said in a statement. What this research shows is that ExxonMobil has exploited Australia's natural resources, made a ton of money and siphoned it all off overseas. By using notorious tax havens, high-interest internal loans and related party transactions, they've sucked the taxpayer dry. ExxonMobil has $54 billion sitting in offshore bank accounts. Our research shows that much of that money has been funneled from Australia through Exxon's Dutch outfit, and ultimately through their Bahamas subsidiary. But the very idea of Exxon Australia being owned in the Bahamas raises more questions than answers. The report also alleges Exxon misled a Senate inquiry into corporate tax avoidance in 2015 by failing to disclose its Dutch ownership when specifically asked to report on related party transactions with operations in foreign countries. According to Exxon's U.S. filings, the ATO has not approved Exxon's tax filings for nearly a decade. No wonder the ATO is disputing nearly a decade of returns from this company, Mr. Ward said. It's some of the most aggressive tax avoidance I have seen. In a statement, a spokesman said ExxonMobil Australia was currently in a corporate income tax loss position, which is attributable to the significant investments being made in Australian oil and gas projects such as the Kipper-Tuna-Turrum project, Longford Gas Conditioning Plant, Longford Liquids Pipeline and the Gorgon project in Western Australia. We have invested almost $18 billion in Australian oil and gas projects, including investments in the Kipper-Tuna-Turrum project in the Gippsland Basin, as well as the Chevron-operated Gorgon project in Western Australia, of which ExxonMobil is a 25% joint venture participant, he said. As these multi-billion investments were completed in 2017 and have started production, the amount of tax paid by ExxonMobil Australia is anticipated to increase significantly. Over the next decade, the total tax payable is projected to continue to be in the billions of dollars. The spokesman said the rates Exxon Australia paid for intercompany loans were calculated on an arm's-length commercial basis with rates comparable to what could be achieved on the open market. We have invested almost $18 billion in Australian oil and gas projects, source supplied. It comes after the Australian Taxation Office on Thursday night released its corporate tax transparency report, revealing 732 large companies, or 36%, paid no tax in the 2015-16 financial year. In releasing the data, the ATO said there may be a focus on the number of groups which paid either no tax or small amount of tax relative to gross income, but that it was important to remember that corporate income tax was payable on profits, not gross income, and that in any given year a significant percentage of even the largest companies make losses, not just for tax purposes, but also for accounting purposes.